World's largest economy. The United States of America is struggling with a 40-year high inflation, keeping that in mind. The Federal Reserve country's central bank is poised to unleash another interest rate hike after the latest data showed a worrying U.S. inflation picture. An increase in the interest rate is expected on Wednesday, after the conclusion of Federal Reserve's two-day policy meeting. As of now, interest rate hike looks to be the primary weapon for the U.S. central bank to bring down inflation. The central bank has already increased the benchmark lending rate 4 times this year, including 2 straight 3/4-point hikes in June and July. But this constant increase in rate hike is causing concern. Some believe the aggressive action could tip the U.S. economy into recession, which would reverberate around the globe. Moreover, the consumer price report for August showed a continued rise in the prices of housing, food and medical costs. Although the current high inflation is not the only thing which is concerning the policy makers, they fear that consumers and businesses might believe that rising prices will become a permanent feature in the economy, and that can lead to a phenomenon called stagflation. Now, that is basically a situation where the inflation rate is high, the economic growth rate slows down, and the unemployment remains steadily high. Meanwhile, soaring prices of goods and commodities has been inflicting pain on American consumers and businesses for a while. Despite the welcome drop in fuel prices at the petrol pump in recent weeks, initially the rise in prices was due to the high demand of goods and commodities during the COVID pandemic, when supply chains were interrupted in a bid to control the COVID outbreak. And now, to make matters worse, the prices are being affected by COVID lockdowns in China and surging energy and food prices due to the ongoing war.